Hello investors, my name is Dehan. Welcome back to number one place for all your investing needs. In today's video, we're going to be talking about a few things, some of the biggest things in the stock market right now. So the key factors is going to be the CPI data that is coming out on the 10th. We have the midterm elections on the 8th, and obviously we have, what's going to happen after that. Are we going to see prices to start to come down or prices to go up? Big thing we're going to be talking about is obviously the five top stocks that we're buying right now on the dip, as the market has been, hammered very hard in the past 12 months or so. So there's going to be buying opportunities. So we're going to be talking about the buying opportunities and which stocks could potentially rally in the, long term. Now, obviously, how the midterm will affect the stock market, well, that's definitely something we're going to be getting into as well. So before we get into it, guys, smash that like button for me, subscribe to the channel, and let's get into it. So first of all, like we said, the midterm elections are going to be on November 8th. It's going to be on Tuesday. Now, how does the stock market affect the midterms? Well, it actually does. The midterm does affect everything, especially if it's split. If we have, the House and the Senate and everything split between, that affects the stock market, in a big way. So usually, if we take a look here in history, what does it tell us? Well, most data point to an upturn in the S&P 500 after the midterm election. So since 1950, the average return for the S&P 500 in 12 months after the midterm election is 15%, surprisingly, with no down years, Lynch says. So in 17 of the 19 midterms since 1946, the stock performed better in the 6 months following the election than they did in the 6 months leading up to it. And if the outcome this year is as expected with a Democratic president and either a divided Congress or a Republican sweep of both chambers, equity investors should benefit with the S&P 500 averaging annual gains within the range of 13%, he said. So that's exactly what I was thinking as well. If we have a split in the parties, I believe this is going to make the markets rally. Now, it might not happen right away, but I believe in the next, upcoming months, we're going to see that flip flop. And now, what are other key things that are going to be happening, obviously? So, CPI data. CPI data is something that's coming out as well on November 10th. And now, how will that affect things? So, if we take a look here at 12-month percent change, obviously, we saw here things start to get crazy here and then continue to go up, up, up after COVID. And now we see January 2022, it was at 7.5%. Then, February, 7.9. It continued to go higher and higher and higher. And then finally, we peaked here in June at 9.1. 9.1 seemed to be the highest area that we saw. And then after that 9.1 area, we're coming down. Now we're at 8.2. Can this continue to go down? That's exactly what we need, obviously. Some areas of the market affected differently. So, obviously, housing, we're still lagging with rents and mortgages and things like that. Those things are still lagging and causing the CPI data, and inflation in general to be higher than it actually is. It lags about 1 year behind. So, when can we actually see markets start to, price in these things and see the CPI data come down with inflation? My personal opinion right now is going to be end of February, beginning of March potentially when Q1 ends. So beginning of Q2, I believe we might see a huge rally in the markets going into towards the mid and end of 2023. That's personally what I'm believing right now will happen in the stock market. So I think that that's when finally inflation might get beat, and Jerome Powell might stop doing these increases that we continue to have. We just had a 75-point basis increase on the rates, and we're expecting another 50 or a 75 in December, which will continue to pummel the market as well. But hopefully that gets priced in, and maybe we'll see a dovish move by Jay Powell. So those are the big two key factors that we're going to be watching in the upcoming weeks. Now let's get into the actual stocks. So these are going to be the five stocks that we believe could have a great return in the long term. So first of all, the first stock on this list is going to be Meta. So Meta has been destroyed. Obviously, its market cap was close to $1 trillion market cap, and we continue to go down lower and lower. Now in the past 5 days, we're down 7.5%. Past month, 34%, past 6 months, 55%, and then year to date, Meta is down over 73%, currently at a market cap of 240 billion with a PE ratio of 8.66. That is absolutely insane. How is Meta, a growth company, at a 8.66 PE ratio? That's unbelievable. This stock was trading at $338. Now we're at $90. On the 1 year chart, obviously, we see a similar price there. And then 5 year chart, we saw that peak of close to $376 or so. So from that area, we're actually down even more, about 75.8%. And now Meta is trading at lower prices than it was when COVID happened. When COVID happened, it was trading at higher prices, and even here at 2018 prices. So that is insane. We would have to get in the max chart to just see where these prices are. So right now, Meta is trading at prices that we last traded at in 2015. So 7 years of gains have been wiped out by Meta right here, and this could be a great opportunity if it continues to pull back down, how it will affect the stock price. So the latest quarter's earnings that we just saw on 10/26, well, the EPS normalized actual, it missed by 21 cents, so it was at $1.64. The EPS gap actual was missed by 0.22, so it was at 164. The revenue was 27.71 billion, and revenue surprised, it beat by 313.82 million. But obviously, Zuck put a lot of money into the metaverse, which caused the Meta to plummet pretty much with the revenue and advertising and different things like that not doing as good as they should have. So is Meta a play for the long term? I believe so personally. I'm going to be buying the dip on this one as it continues to come down. The second stock on our list is going to be Nvidia. So Nvidia actually has been performing quite nicely in the past month or so. As we take a look, it's trading at $141. It was up $7 on Friday, 5.5%. Market cap $352 billion with a PE ratio of 46. In the past 5 days, this one's up 2.8%. Past month, 7.8%. And then past 6 months, it is actually down 24%. But we see here on October 14th, we had a low of 112. So we came from $110 or so to 141. So we saw a slight recovery here of about 26% in the past month. And then on the year to date, we're down 53%, guys. So this stock was trading at $301. It's been sliced in half right there. On the 1 year chart, down 54%. And then 5 year chart, obviously, we saw a peak here November 19th of 2021, so almost 1 year exactly. It was trading at $330. So from that area, we're down about 57%. And now, Nvidia is trading at COVID prices. So this is where it was pretty much when the Rona, after the Rona. Before Rona, it was trading at around $51. So we're way ahead of that still, which is good. But we're trading at prices where the recovery started to happen. Or actually in 2022 this is the price actually right there. So it started to recover there, and that's pretty much the area we're trading in right now. Hopefully we don't break through that and continue to go down to where when the Rona started, because $51 for Nvidia would be insane, and I would definitely be buying a dip on that. If we take a look here, Nvidia's previous quarter, they missed by 0.01, so they were at 51 cents a share. They beat here on the GAAP by 0.6, and that was 26 cents. And then the revenue was at 6.7 billion, beating by 3.47 million. Now, upcoming quarter, we have it in about a week and a half. They're expecting 71 cents per share. The GAAP is going to be 40 cents per share. Revenue estimate is going to be 5.85 billion, which is lower than the previous quarter. So they expect less revenue. But we've seen other companies, Intel, Qualcomm, and AMD, and how they've performed after earnings. And I believe that Nvidia could do okay with earnings because they will have a good outlook for the future. And obviously, we're just getting hammered right now because the whole China situation that's going on. So I believe that in the long term, this will do very, very well. And it is definitely a buy opportunity in my opinion. Then we have the third stock on the list, going to be Adobe. So Adobe has been hit as well. PE ratio of 28, 132 billion market cap. In the past week, this one's down 11%. Past month, 4%. Past 6 months, 26%. Year to date, we're down almost 50%. It seems like everything's down about 50%. So we hit a high here in November of last year at $688 per share. Since then, we're down over 58%. Obviously, this stock right now is trading at prices that we were trading at when the Rona started, once again in 2022. So if we zoom out, obviously, it's still looking great, but we saw a lot of those gains happen in the past 2 years, and now they're pretty much getting wiped away. Now, Adobe, here we see earnings happen on 9/15/2022, so about 2 months ago, beat by 6 cents and beat by 2 cents down here. Revenue was at 4.43 billion, missing by about 6.3 million. And then we see earnings right now. They're expecting 350 and then 248 with earnings at 4.53 billion, pretty much the same as the previous quarter. We're going to watch Adobe very, very closely. Obviously, a lot of people were doing at-home work during the Rona, and stocks like Adobe rocketed on higher. Now we're seeing a pullback in these stocks, but could there be an opportunity for the long term? I believe so, because there's still going to be people that are going to be using Adobe for the long term. it's a great platform to use. So people are going to be buying the dip left and right, in my opinion, and it's definitely one of those stocks on my list. Then we have the four stocks. The four stocks is going to be Blocks. So Squarespace is what it used to be known. It is currently trading at $60 per share, and it's up actually 11.5%. Past 5 days we're flat almost. Past month we're down 3%. Past 6 months 37%, and then on the 1 year chart we're down over 63%. 1 year 76%. So we had a peak here at around $275. Since then we're down 78%. So right now Square is trading at prices that it was trading at right around before the Rona happened. Obviously we're not at the lows that we saw in 2020 at $38 or so. So we're still ahead of that area, and we could see a little bit of a bounce back in the future as Block continues to grow. Now this one, if we take a look at the earnings, so we just had earnings literally on Friday, and that's why the stock was up 11.5%. So it beat by 19 cents and it beat by 24 cents. So it beat definitely, which was a great thing for them. Revenue was at 4.5 billion, beating it by 47 million. So people were very, very happy with those earnings, and that's why the stock is starting to climb back up. Now, a year or 2 years from now, this stock could definitely be back in the $100 range, in my opinion, and that's exactly why we're looking at this one. Now, personally, I am not buying Square, but it is a stock that I'm watching very closely for opportunities in the long term. And then last but not least, the number 5 stock on our list is going to be Google. So obviously Alphabet, it's a no-brainer. Obviously, the earnings were not good, people were not happy, but the long term, Google is a money machine in my opinion. So this one, current market cap 1.1 trillion, PE of 17. Right now, it was up 3.7% on Friday, trading at $86. In the past 5 days, we're down 9%. Past month, 14%. Past year here, 40%, and then on the 1 year chart, 41%. We saw a peak here at $148 per share, so we're down about 42% from that area. Now we're trading at prices right before the Rona happened, basically. So 2 years of gains have been wiped out. We saw a low of $55 here when the Rona happened, so we still have another 30 to 40% before we hit that area. Hopefully we don't hit that area, but if we do, it's just going to be a better opportunity to buy the dip and continue to hold this one for the long term. If we zoom out, obviously Google just goes up, 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 as we see. Obviously this was a huge jump in the market, and that's why we see a pullback right now with everything going on. And then if we take a look here at the earnings, so the earnings were about a week or two ago. They missed. So they missed by 19 cents on both ends. Revenue was at 69 billion, missing by 1.55 billion. That's a huge miss, obviously, and that's why the market was not happy and everything pulled down with it. Now, if we take a look at the NASDAQ in general, guys, how is the NASDAQ performing? Obviously, in the past 6 months, we're down 14%, past year 34%, and then in 1 year 33%. So the market is down, obviously. It's down over 34% on the NASDAQ, so that's why tech has been hammered, but there's still other tech stocks that are, getting hammered right now. So some of the big dogs that are being hit right now is obviously Google, Apple, Tesla, we have Amazon, Microsoft. All these guys have kept up a little bit better than the rest of the market, and now those are getting pushed down as well. So there's opportunities out there, and in my opinion, these are great opportunities. Buy when everybody else is freaking out, because for the long term, these are beautiful opportunities. If you like the Google, let's say at $120, why would you not like it at $86? You're getting more for your buck. So instead of getting one share, you're getting about 1.5 shares, and you can continue to tumble up and accumulate your shares. So guys, let me know in the comments below, what are your opinions on the stock market right now? What do you believe is going to happen in the long term? When will we be seeing a bottom? Is inflation and CPI data finally going to start to come down? Let me know your thoughts. Subscribe to the channel, smash that like button, and I'll see you guys in the next one. I'm not a financial advisor. This is not financial advice. This is all for entertainment purposes only. So before investing, speak to your financial advisor, do your own due diligence, and make sure you understand what you're getting into. I hope you guys enjoyed, and I hope to see you guys in the next one. Goodbye.